All right. Good morning, everyone. This is Bharat Vellore. I'm the General Manager for Provenia here in APAC, and I welcome everyone who has dialed in today for what is going to be a fantastic chat on how to build world-class digital lending experiences. And to discuss on this with me, I have Aditya Chintawar, who's the Chief Product Officer from Coinworks. So uh, I think it's going to be a fantastic chat, considering Aditya's experience building in one of what I consider is the hottest markets for digital lending in Asia, which is Indonesia. And Aditya's got some great experience building that out there. Uh, all right, just to get started, Aditya, maybe you can go ahead, do a quick introduction of yourself, your role, and maybe also introduce Coinworks to the audience here.
Hey, morning, Bharat. Glad to do this in the morning. Good morning to everyone dialing in from all parts of the world. I lead product and design team at Coinworks. We are a bunch of 40 people trying to solve problems across lending, investing, and basically, we want to innovate on how Indonesia borrows, transacts, and invest. All the domains of how money moves across the economy. Coinworks, I mean, it's been 7 years now for us to we have solved SME lending. We definitely lead certain bit of market share in terms of online sellers economy, and we have of late now started a SME neobank, which further helps customer start having a transaction data enough to build a credit score to then get underwrite, because the bulk of the problem of any emerging economy is access to credit, but who would give credit if somebody has to trust the first time? So I think we are trying to solve that problem by ensuring more people actually have a bank account, are able to transact, and then eventually are able to access credit. Yeah.
Thanks for that intro, Aditya. You've already touched upon some interesting points. I could just pick on those and we can have a chat on that. I would also want to let everyone in the audience know that you could drop in your questions. There's a Q&A section here. This chat is going to be very interactive, as interactive as possible. So we'll try to pick on some questions from the audience as well. So you could put in their into the Q&A. I'll keep having a look there and try to bring those questions at an appropriate time into the discussion. I also want to let everyone know that we'll be running a poll as well. Couple of questions will pop up. Really encourage you to participate in the poll. I think it'll give us good insights as well on where we are and what kind of challenges we see within the community here. So you would have a poll like this come up now. So we can kind of start out with this poll question 1, and I'd encourage everyone to kind of just drop in your choices there on what is the key benefit digital lending has delivered for your organization. Is it faster decisioning? Is it faster decisioning and better risk assessment? Is it faster decisioning, better risk assessment, and customized product features? Or maybe some of you haven't yet implemented digital lending. It'll give us a good feel of where the audience is at within their organizations at digital in bringing in digital lending. I hope everyone can see the poll and are able to answer the poll. All right, we've got 37 responses. Interestingly, 13 of them, 35%, haven't implemented digital lending. So it'll be a great kind of discussion for you to kind of come in and consider how that works and how to get in there. 16% is seeing actually the true benefit, which includes faster decisioning, better risk assessment, and customized product features, which is personalizing the entire product and offering to the customer. Interestingly, I think we could say 50% are looking at faster decisioning, and within that, half of it is on doing decisioning and better risk assessment. All right, we can close the poll. Let's get into the chat, Aditya. Again, we're talking about Southeast Asia, within
Yeah.
which Indonesia, right? As in Indonesia, we've got uh, half of the population is less than 30 years old. It's young population. They spend more than 8 hours online. So you know that it's a digitally native population, which spends a lot of time on their smartphones. But again, another feature there is the underbanked and unbanked percentage of the population as well. So you talked about access to credit, and how I think through pandemic that level of adoption of digital services has kind of taken a huge jump. So what has this digitization? What does it mean to lending? How has it come into lending? Maybe we can start with that, on how digitization and then the advantages that digitization brings. How is that? What does it mean for lending?
Great. I mean, I think that's the biggest question, which I think most of us are always worried about. How do you define digitization? Is it at an consumer level? Is it at your journey level? Is it at your operation level, right? And I think I'll try to touch upon a few of these aspects. I think the first part, which is very important to understand here, is uh, I there were some of the factors which certainly accelerated digitization. I think this round of digitization was certainly led by the consumers first. The consumer behavior, the consumer, when I mean, is the end consumer, not the borrower here. The wider expectation of people to have everything online at a touch of a button ensured that, you know, in that sense, SMEs also had to be digitized in nature. I feel the digitization of SMEs in how they deliver services started way before pandemic.
Mm.
A pandemic acted as a classical catalyst, which improved the percentage and the speed at which this digitization happened. And the biggest partner in all of this digitization has been the government. And it's always very difficult to move the governments. And if the governments are aligned to the wider goal of digitization, then the consumer behavior with the government acceleration ensured that a lot of SMEs actually got digitized. On top of this, I mean, in my view, if I've seen across India, Indonesia, predominantly Southeast Asia, at least $500 million of VC money has gone into ensuring that these SMEs are able to transact or sell services digitally, right? Because the number one problem in any emerging economy is the bulk of the GDP comes from the unorganized sector, which might not be registered businesses, might be operating out of homes, etc., using a single bank account, which is their personal bank account and business bank account. Now, how do you underwrite someone who has the same bank account? How do you figure out which are the expenses personal and which are the expenses for business? So I think a lot of these tools and infrastructure built actually helped us in segregating these expenses. And this would be the external way of how the SMEs got digitized. That lot of education and literacy also happened, because then they are managing their own businesses digitally, which further helped a lot of lending companies. Because earlier, the argument of we having a loan application, having a longer loan application was always a challenge. Now they're pretty used to filling a standard form, X documents for KYC. So the concept of journey has come into place across ecosystem, which is a very good thing. We can fight the battle of journey when everybody is aligned. That, I think, led to the second stage, which is about how do you optimize your own lending loan application journey? What is comfortable to the user? What is comfortable to which segment of user? So I think if once we as a lending company or any organization is able to determine what is the target persona, what is the tolerance of the target persona in terms of filling a loan application, and then what sort of data do you want from them and the ease of they giving that data. Once this is all mapped out and identified, then constructing that journey digitally is pretty seamless. And I think that this is the second part of digitization, I feel, once we are identifying the right touch points in the lending journey. And the last part becomes how seamless are you able to, or what is the speed of outcome which you can deliver to the lender, the borrower, sorry. In this in today's world, right, there are many options to the borrower. I think what is pretty important is, are you able to digitize your in-house credit risk operational journey to be right out there when the customer needs you? uh, there are so many use cases, especially in Indonesia, and I'm very sure in all emerging markets, right? It's for a fisherman, it's not important whether you're giving the money or how big money you're able to underwrite to them. What is important to them is, are you able to give that money at 6 a.m. in the morning or not, right? So speed of underwriting or timing of delivery of that loan is so important that I think I generally categorize these three parts of any lending organization as digitization. You cannot be too inward focus. You cannot be only too outward focus. It has to be a step-by-step approach where each leg of the relay is able to handle the previous load and the promise which you have done to the lender. So I think,
You brought on a fantastic point there, Aditya. I just want to kind of maybe just
okay.
focus that on a bit more. I think when I kind of talked about what digitization means to lending, I think one of the key bits that you've just mentioned there is the availability of the service, right? I think that is been transformational, right? As in, we've all been used to having any credit decision go through a certain operational process, right? You mentioned how the ecosystem has come together, of course, with the government also playing a big role there, but the entire ecosystem has come together. One, for us to weave that journey of a customer coming in and kind of asking for credit. But then it's the availability of service which has kind of been, I think, that's the biggest piece which has been there, where it's 24/7, it's on demand. It's how you take that operational process and you have
Hmm.
to digitize what that is not visible to a lot of them, right? As in, look, for many of us, when we kind of look of building around a digital lending product, we keep thinking about the front end experience for the customer, but a lot of digitization has to happen on the operational piece, which is at the back end, for the availability of service to be on demand. You talked about the speed of outcome, right? For them to really get that credit as soon as possible.
Absolutely. I mean, imagine, right? I mean, so many of my industry peers I spoke to, right? And we keep chatting, right? Within India, Indonesia, or within the region, right? Vietnam, Philippines. Majority of the conversations, very naturally end up revolving around very front end aspects of it, right?
Mhm.
And the problem is, you scale up the front end beautifully. Like, there are amazing products which I've seen there, both consumer and SME out there, who provide amazing journey, but the backend experience is weaker, right? And I think I always, try to ensure that, nobody's perfect, but we are trying to always focus inwards, because the expectation is so highly set outside that you have to map that and, map to that expectation very, very seamlessly.
Agreed. I think there's a question which has kind of come into on a very similar lines. I think it's like the boundaries of digital lending, right? I think one is the customer self-servicing and applying, which you talked about, which is the front end,
Mm.
but it's actually the true digital lending is when the actual process and the documentation, the entire operational piece is
Mm.
also done digital, because only then the availability of services provided
Yes.
digitally, right?
I think the common lever I use to answer this question, even internally, is what is the difference between digitalization and automation? We usually tend to confuse when we try to automate a certain operational process in parallel to digitizing a manual process, right? So I think something which is manual, something which is, I would define boundary. I take the classic process, right? What is not digital or what is available in the market to digitize, right? Now, the lot of friction can be reduced in terms of digitization there. Maybe a person is able to access to that data. Let's say somebody is uploading a statement, right? Uh, can I just look at that statement or underwrite? Or I can use that statement, clean up that statement, put an OCR, put some summary on top of that, so that the basically credit underwriting can be made faster, right? So I think we always have to understand what are we digitizing. And if the digitization has been very effective, then you can start automating that directly. I think that is how I would define the boundary in terms of manual to digital, digital to automation. Then I think, once that, then it becomes a cleaner way of doing it. Else some processes are automated, and then your SLA will break because they cannot handle the load of the previous manual process. I'm not sure if that answers the question, but that's how I look at going by it.
No, it makes complete sense to me. And also, I think when we look at this operational piece, right, as in, and then we are digitizing that, there's additional benefits as well. You talked about the statement,
Mm.
right? Um, Once we digitize it, we could actually get further insights. We could actually use that information. Once you have this digitized operational process,
Mm.
there's the benefit is not just automating and be able to kind of have that faster outcome. We are
Yeah.
actually unlocking additional data points as well, which we could really kind of leverage on to kind of build better products, better risk assessments and all that. As in statements is a good example.
Yeah.
As in that was a process which was manual for the longest time, right? As in you
Yes.
would ask for the bank statements, financial
Yeah.
statements, and have a person kind of go through that analysis. Now that we've kind of are exploring having those digitized and bringing in an automated analysis of those,
Mm.
it's actually, I know of a lot of case points where people have kind of unraveled further insights which would go beyond any manual kind of analysis that is done, and use those insights and bring it into their product.
Absolutely.
Yeah. So I wanted to focus a bit more on the strategies as well. When you are building out your digital lending products, the experience that you're building, maybe you could kind of, from your experience at Coinworks and also from what you're seeing and from the peers as well, what are
Mm.
some of the strategies that you use to kind of products and experiences?
Hey, yeah, I think before I jump onto the strategy, right, I always want to focus on this aspect the first. We all need to understand the lending behavior. I mean, we all are in lending business. I believe almost everybody dialed in is either some way or the other in some financial service organizations, whether banking, which are super matured in their processes, operations, and how they go ahead. And as a fintech, I think there's one thing which I always respect about banks is the process culture, right? We always need to implement and learn that. As a fintech, what I always like is that sense of innovation, that when you keep pushing the boundaries. So I think I always feel we are all solving for trust here, right?
Hmm.
Whenever I mean, we all have stopped going to banks now, everything being digital, but you would have noticed this. The cheapest pen available in the market is tied to a rope next to the teller, right? It's not that the pen is, the pen doesn't cost much. The fact that I think overall within the Southeast Asia or the Indian, I mean, overall continent, you know, we have been always, I mean, invaded, looted, and etc. Right? There's this huge emotion of, this would be taken by someone else, or the lack of trust availability, and that shows in everything. I ask you access data because I don't trust you. I ask 10 other things to validate something because I don't trust the person. So this mindset actually ends up driving a lot of decision making and strategy. So once we actually deconstruct trust as to where do I actually trust the user and where do I don't trust the user is something which I like to define first with my business. What are my critical parameters? Because there is fraud, there is risk, etc. Right? But lending, again, being a very tricky business, it's the outcome of testing is very slow. I can do as much as back testing I want, but overall outcome I will typically have to wait for 1 month if it's a short term loan, or 3 months or a quarter if it's a medium term loan, for me to even test what sort of underwriting system I build. Is this right or not? Is the consumer or the target segment for which I've made this product is reacting to that product? Are there enough top ups again? Or if the disbursement has happened, what is the loan portfolio quality which I'm having? What is the level of defaults? So I think with all these constraints, right, with the trust constraint, with the life cycle of experimentation in lending, and the availability of loan portfolio analytics to for me to scale up a particular product, I think these 3 or 4 levers I've always had that bigger conversation with loan team or the business team, is that, hey, we need to run maximum programs at the same time on smaller budgets so that I know which program is running the best, enough for us to scale, right? So I think
Mm.
this ability to drive smaller programs within the organization, whether a fintech or a bank, is always going to help us to figure out which product actually works or does not work, right? With this premise, that's the outcome I'm seeking. The second part is I'm a product manager at the end of the day, right? I mean, so problem solving is the biggest thing which I like. But if I do not have a scalable view, then whenever I talk to business, I have to go back to Blackboard every single time to build out something. And it's very time consuming. It's very distracting. because it's you start focusing less on the business, more on the building part of it, right? I would rather want to focus more on the business and less on the building part of it, right? So what is my key differentiator is not that I have the best LOS system. Okay. That is, the customer doesn't care about that. What is the differentiator is if I have the right product on that, right? Then am I the expert in building that, or I want to ensure that I'm able to classic build versus buy decision, right? So I think we all have to be very open in understanding, like the point I touched about, we have to be open in defining trust. We also have to be defining and open in our infrastructure, right? How scalable it is. I'm usually the guy who's always trying to figure out something low code, no code, to test it out very quickly, to fail quickly, right? There's no point failing after 6 months, especially in lending. It's not something which I can A/B test on my app. Maybe I can A/B test my loan application journey, but I cannot A/B test my loan portfolio, no matter how much back testing I do in an ever evolving SME market.
That agility is key, isn't it?
It is
That
very key, right? You need to
yeah.
move faster, and you need to figure out what is working, what is not working. So I think that way, a lot of strategies which I would implement, not from a lending point of view, but being available in the market point of view, would be some of these, which actually I'm sure most of fintech leaders would also resonate in some sense of this, because there is always this inherent feeling that, hey, I want to do this, but I cannot do this because, hey, my infrastructure is not there yet, right? And then so many great ideas or lending products never see the light of the day, because you're like, yeah, this is not automated. Maybe I'll do this later on. And somebody comes up in the market, takes that market share, and you as a leader are usually having a coffee somewhere and saying, you know what, I told you so this will work, but we didn't do it. And a few years back, I had that conversation, and I'm like, I'm never going to have that conversation again. So I think these are the few things which might help you having an agility while in the rapid evolving environment.
So from our perspective as well, Aditya, there have been so many examples of where we've got into this build versus buy discussions with the fintechs that we speak to, especially with the product leads, right? As in, of course, things can be built, right? As in, you're a fintech, you've already kind of building some fantastic stuff there. So you would want to kind of build as many as you could, right? There's nothing stopping you from building as many aspects of your entire service that's possible. But what you just mentioned, I think that's the key point, which is the agility, right? As in, you really, especially from building out the product features and making sure that you have that responsiveness to a changing market needs, right? Something changes on the customer, or you've tried out a product feature and you've realized that you have to quickly kind of change that into something else. So when you have to do that, having to kind of build, rebuild, that kind of is almost a drain on resources. We've also seen things getting deprioritized because it's such a big effort. They were like, it's a big effort, so let's not touch it right now. And then that is one of the factors leading them to not be able to put that out in the market very quickly, right? So that's a discussion that we keep having with fintechs. We talk about our low code, no code platform as well, where you're like, your core competency is where it is. You could use this and build out your products and kind of test them out and take them to the product, take them to the market very quickly. So you brought on a very good point there.
I think the best way to address this, if anybody tells me, right, hey, I'm having a tough conversation with business, I'm speaking as a product guy here, is I always flip the question. I always ask the business, hey, can you tell me a 12-month roadmap of how you're going to scale up lending, right? Majority of them have that in terms of targets, disbursements, how they're going to scale up lending. But how you're going to beating competition today is not just about being there or having the right product. It's also about, somebody might just say, I'm giving a rate cut, right? So why would somebody stick with you is also because you are able to build a product very quickly to their needs without taking a long time, right? So my definition of roadmap with business is always about, am I having a good view of the future from a product point of view rather than just disbursement point of view? We have to come out of that mindset. Today, influencers have a very different need than a classic persona, which is able to be an online seller versus an offline seller, which has a very different cycles of credit required to them, maybe a working capital loan point of view. So connecting this consumer to their needs and then to create multiple journeys, that has to be solved with business actually. And I think majority of the business leaders have this view. It's not they don't have it. But again, they're just, I think, forced not to act upon it because of limited resources. Bandwidth is always the concern, right? So
Correct. We also have a good question just on strategies from Corey. So I'll just kind of bring it in there into the discussion here. Corey's asking about strategies that you would employ to boost retention. We kind of focus so much on acquisition and kind of making the decisions quickly, but how do we boost retention and actually overall lifetime value for these borrowers?
wow, I mean, this is one question which has kept me awake since long, right? I think thanks, Corey. So I think I would love to share all my experiences, etc. Right? So Coinworks is a super app. I mean, right? We have everything, like I said, from investments to lending to borrowing. But the person who is come to ask you money, you cannot cross sell him in investment product. He doesn't have money. He or she needs money, right? So I think retention continues to be a problem that way. That's the premise. Second, in an island economy, I mean, we have more than 17,000 islands across Indonesia. The average speed is 3.5G or 4G. Average smartphone having 4 GB of RAM, 64 GB. I mean, I can go on about it because I've spent a lot of time in this space, Corey. So I need to be relevant in somebody's phone, else I'm going to get uninstalled. People always have space for good morning messages and happy birthday messages, but they don't have space for an app where, I reject their loan application. I'm bound to be uninstalled. I have nothing to offer to them. Rather, the only thing they're going to action upon me is like, I've hurt their ego. I'm saying you're not worth it. I'm not going to give you a loan. Then I'm going to get uninstalled. So I think at Coinworks, I think we try to solve it differently, right? We try to, first is you have to have a predictive sense of figuring out post-registration, what is the propensity that you might give a loan to them or not, right? Accordingly, you are able to change their customer experience in terms of, rather than why do we people get frustrated? What does retention mean is like, you take me through the whole loan application process, make me wait for 5 days, and then tell me you're rejected. Is not, I think, the best part of that. Anxiety kill is a very big problem. So I think you need to handle it upstream also. Then while you come on the middle stream, it's also about how are you able to give them a communication of what's happening with their loan application, right? People never forget, people, usually forget about what happened with them, but they never forget how you made them feel. That's one of the core principles I stick to. So if I made them feel that they have to chase me, they don't know what's happening, and and we have also not solved it perfectly, but that's, I'm trying to give the strategy, right? That always trying to give them visibility of what's happening gives them that, hey, we think about you, we are empathetic about you, right? This is the middle part of it. And then the last part of it is with Coinworks going SME neobank, we are always able to offer them a bank account by default, in terms of how they are able to do transaction on our platform through various, they might be payables, receivable, etc., in running their shop, which also helps us a lot of transaction data. So the promise is, hey, we might not be able to immediately give a loan to you, but if not, after a 3-month transaction data, but we want to be surely the first people who would take a bet on you, right? So a lot of underserved or underbanked market versus, new to credit market. The classic thing is they know that nobody's going to give them a loan upfront, but how am I able to do that? And banked customers, I mean, that is a market for our banking friends. I mean, I think the Indonesian banking system that way is phenomenal job they're doing it. So I think we all know our segments, we all know our strengths and how we want to operate within it. So I think we need to define these elements, and I think then you would definitely be able to bump up your retention, right? If I go too technical about it, what is your app size? What packages are you downloading specific to a loan customer? Because we are a super app. Do I need to push my whole app? Do I need to have a progressive disclosure in terms of getting some curiosity in the customer? How are they, seeing features of my app? I mean, I can go in that as well, but I think these would be some of the things which you can try it out, definitely. And I'm dead sure they worked for us, they would work for you.
But would you also do on top of that, Aisha, would you also do any ongoing, like you have your customer base which is on the super app, some are lending, some are not non-lending customers, but is you also talked about the propensity post registration as well, but beyond that propensity, is there any other ongoing analysis that you would kind of do on your existing customer base based on their behavior, on app, or any other external data points that come in? Is there any analysis that is done to kind of identify certain campaigns to say that this customer, this product,
Hmm.
as a cross sell,
Yeah.
or even kind of increasing limits,
Hmm.
do you go back and have those built in as well, within
I
the app
mean,
as an experience?
yeah, totally. I mean, we have those. Probably the reason I did not mention that because they are business as usual for us.
Okay.
We go pretty heavy about it in terms of that because we give a limit to the borrowers. Once the limit, some people take the full loan, some people take a part of it. Uh, Typical working capital loan situation, the take rate is pretty high. The top up loans are pretty high. They're able to self serve them from a top up point of view. For some people, who are in a different bucket, who might need help in how they access it, we also have a dedicated outbound support which able to help them. And limit evaluation and limit expiry is an ever evolving thing. We always would love to trust people, like I said again, trust people who are having a very good transaction history. In fact, a lot of sellers have built their business with us. We are part of their growth story because our credit limit to them have continuously increased. And if the behavior is good, even if the interest rate is high, the stickiness is good. That is because they just need the money quickly when they need it, like I said. So with that, the take rate definitely improves and bottom line becomes stronger, LTV becomes stronger.
Yeah. We've got another question here, which is, I think, comparing, say, certain parts of the process, operational process, the quality of the process, in digital lending as compared to a traditional lending. So they brought up a couple of
Mm.
examples like eKYC or
Mm.
document verification,
Mm.
which is replacing the in-person KYC, right? How would you
Mm.
compare the quality of that operational process, between
Okay.
digital and the traditional?
So I think a lot of this innovation has definitely happened right now. Again, as part of COVID, etc. Right, a lot of countries have opened up. So I think if I break up lending, right, they usually say that lending has been into multiple waves. The first wave was pretty classic, where fintechs just try to understand, they're testing waters, they're trying to understand can they digitize lending. The second wave, I think, probably is somewhat where which we are exiting right now, in terms of a lot of type of different type of loans coming in, a lot of digital loan applications coming in. But I think what our friend is trying to highlight or ask a question is, I relate that to a third wave, where a lot of open finance, etc. APIs have been out there in the market, which we can definitely use. There are some APIs in different markets where the government has also opened it for us to verify and make the customer experience very seamless. With that premise, I think we are definitely very open to it. We always love to implement that, because the customer always ends up seeing something very different, not to change the behavior, but to add to that ease. For example, there are amazing ways where you can get somebody to upload just a statement and you do all the analytics rather than they giving you stuff, or you can directly have an API connection for that, feed it into the system, saves a lot of manual effort also, etc. Right? So I think uh, KYC processes have definitely been improved. There are a lot of liveness detection services, etc. Likeness, right? So, but I don't think the problem with these APIs is about having those APIs. That's one part of it. The bigger problem is how are they integrated to your underwriting system is the bigger part of it.
Hmm.
I always say data is as dumb as the person looking at it. These data are really, but hey, did you guys lose me? Yeah.
No, we're still
Uh,
here.
yeah, okay. So data is as good as the person looking at it. The problem which happens is these APIs are available, but how effectively are you using them in your underwriting loan application journey is the key part. When is it is being introduced? What is the response time of a certain KYC service, etc. Right? This is the bigger part of it. Between the traditional and the digitalization, I think again it depends upon your risk. What is the level of trust they are okay with to keep on it? But I've generally felt that as a product manager, I continue to, my job is to challenge uh, both internally and externally, the consumer and internally. As long as the criteria are met, I think if we don't adopt it, we're just going to be losing the game here. And the response has also been great. The customer is pretty comfortable with it. If you want, you can have a level of comfort in terms of you do the digital KYC, but you can also do a voice KYC on top of it, or you can do a video call KYC by not completely replacing the face-to-face KYC. There has to be certain forms of it. The loan quality, the portfolio, you naturally see that not much changes with the step-by-step factors, and eventually you can have your own 100% digital journey. So I think I'm no one to say that traditional is bad. It works. Even for high ticket size loans, you'll continue to have an on-site visit. You'll continue to have everything. But it's about you, your decisioning has to be faster enough to predict who has to go on site, right? That funnel has to determine enough mapping of that offline versus online is pretty simple, actually, that everybody be able to do it.
Correct. I think it also again goes back to your earlier point of actually deconstructing the trust factor, right? As in, if you break it down, you'll then understand what data comes in at where, which is really essential, mandatory, and what parts could be kind of maybe that they don't bring in the latency into the process. You could kind of then have them done either post or and still have that built in, right? So it's deconstructing that and really understanding the data that's available as well. Actually, that leads very nicely into our second poll question, because you mentioned third wave as well, with data coming in, advanced technology coming in, and how now that the initial was having the first wave was getting the lending in, like just having the products in place. The second one was kind of getting into the government coming in and building that ecosystem. And now we're talking about third wave bringing in the advanced tech, right? So if we can have the second poll question up. So what is the biggest improvement you could do to your digital lending products, right? Obtaining rich real-time data, which helps you make effective decisions. Ability to quickly adapt to changing market needs and build, edit product features, something that Aditya talked about. Bringing in AI, ML models, artificial intelligence, machine learning models to improve your decisions, or all three above, right? Again, I think everyone would say all three above, but maybe prioritize, right? As in which one would be the biggest improvement you could do presently. So if everyone can find some time to answer the poll, put in your choice there. And we'll go into this section once we close the poll. We'll go into this section and talk a bit more about these bits. These are all very exciting, interesting areas. Give it a minute more, just conscious of time as well. All right, all three above, as expected. I think you would definitely want to bring in, but interesting to see data and the ability to quickly adapt as well. So how do you see this, Aditya, from your? I know everyone talks about AI. It's there. It's all pervasive, I guess. How difficult it is for you to kind of say, here is artificial intelligence, and I'll bring this capability into my lending products. From an ideation point of view, I'm pretty sure there are already a lot of ideas in your head. From that to actually bringing it into production, how do you see it?
Okay, I mean, for this, right? I mean, let us go very first principle, right? Like, let us just understand what do we want with AI? What is a requirement, and are we there yet? What is the sense of comfort and openness we have within our wider community and at Coinworks? Probably that's the direction I would like to take this question, right? So I think first we have, classic loan management, LOS, LMS. This is more of in very, I think AI can help in both sides, in LOS and LMS. LMS is pretty simple. LMS is about, I'll first touch LMS, then go to LMS. LOS, LMS is about predicting what's going to happen in terms of my default. Somebody's phone number just changes, right? Then I need to ensure that I need to recover my money quickly. Maybe but maybe if the repayment pattern was pretty solid, and something happened, you can reach out and probably they'll be okay. They'll themselves come on the app and update their second number, right? That is there. So I think AI definitely helps there. You can start with very simple data analysis, move to data science models. Once the model is working, with that you can be more into productive. But LOS certainly needs a lot of early warning signs for sure. But I think LOS is a bigger question here in terms of what AI can do. Let's again reconstruct it, right? Fraud, I feel, fraud assessment rather has a higher scope of automation, right? Compared to risk assessment, right? That's a traditional view. So far, what has happened is with all the APIs available, eKYC available, I also see a question from Tommy there that, hey, a lot of eKTPs and digitization is happening there. Then, how do we see that at CoinWorks? My point is, we already in that wave where a lot of APIs are available, which can automate fraud for sure. Okay. The problem is with risk assessment. Sometimes I've seen a lot of organizations, their speed of loan assessment is dependent upon the speed of credit admin or credit analyst. And this is the bigger problem here, right? We first understanding that problem, then acknowledging that problem, that, that is a bottleneck, would move us to better decision-making tools, right? Then those decision-making tools might have layers. They might have data science models, normal, approaches, internal risk acceptance criteria, which you'll productize. But then if this is automated at a certain level, then it becomes very easy to introduce AI. So this is definitely required. But do we need it? Do we not need it? We definitely need it. We have to go there. In an ever-growing, evolving business where your cost of margins, especially during pandemic, post-pandemic, everybody is after profitability, which is a good way to do business, right? I think the right way to do business is, I think rest, otherwise it's an idea which does not make money. We all get ideas in the morning, right? So if it is business, it has to be profitable. It has to be profitable. Let us now further deconstruct that. What is that? There is a cost to capital. There is my cost of operations. There is my cost of acquisition, and there is cost of underwriting. Now I cannot play with cost of acquisition, not in typically my hand. I might put different levers of it. The cost of capital, again, pretty business conversation. But what I can definitely optimize is the cost of underwriting and the cost of the operations around it, the people cost. And these two costs, if you see, I've gone layer by layer to the cost level, is something which we can definitely automate, right? And the path which we choose is definitely important. But I think it's inevitable. It's going to happen, right? There would be some day we have to trust the system to go in that. And, electric vehicles, I take an example of electric vehicles. 5 years back, we used to talk about, hey, some country launched something. Now it's out there for retail purchase, right? We used to talk about, hey, AI is out there, robots are out there. Chat GPT is killing so many automations which were done manually that, okay, the accuracy is not that great, let us admit, but it is there to happen. And there are some tools, at least in the underwriting space, because I think underwriting or lending is a 5,000-year-old business, right?
Yeah.
I think it started way before people asking questions of automation, way before then somebody automating a content writer job. So I think their intelligence is quite deeper, modeling is quite deeper. The other day, I reviewed a product offering where new to credit loans can be given by a game theory based loan application process.
Wow.
I asking a person, do you throw garbage in the bin or on the street, is now determining what kind of loan you can give to them. And these products have been implemented already, right? These are very smart game theory based decision. They are able to help new to credit assessment for people who do not have credit score at all. So I think the important key part is not discussing about AI, ensuring you as a company are having a system which is capable for AI. Else, by the time the system is available, you are back to square one in rebuilding whatever you have. So your engineering effort, your existing effort is pretty much gone to waste because you're not able to build on top of that effort, right? So that's why I say it's so evolving that focus on the business, not on the core system in terms of ensure scalability there. not in terms of, hey, step 1, step 2, step 3. You'll get stuck in those steps otherwise.
And also I think bringing in elements where it's possible already, right?
Yeah.
As in, I know from an underwriting point of view, to completely say that all could be modeled out and
Mm.
can be done, maybe we are not yet there, but there are definitely certain elements of it, like early warning signals. There is that there is propensity, there are models for that. So there you could bring in those pieces already
Yeah.
and leverage on some of these models that are available. You mentioned
Yeah.
psychometric, that might be stretching it a game theory level. I think that might be stretching it to bit too far to kind of just to make decisions based on that for NTC.
But you know
Not
what? I'm game for it. After looking at that product, I'm like, I want to experiment this. The point is, if risk is also not open, business is also not open, product is also not open, there's no innovation. Somebody
mm,
has to do it sometime to, and I always see, you need to keep challenging the ecosystem, and eventually something good comes out of it. I'm not saying you have to be the best at it, right? I might fail at it. But the point is, after reviewing that, I'm like, why am I not doing it? I challenge all my PMs internally. Hey, why are we not doing this? Right? Or at least why have we not thought about this? Right? Imagine, right, new to credit people, they have very limited ways of doing this actually, which connects to my, I think I might end up answering Yono's question anyway by default, income estimation, credit scoring. But the point is, there are different segments demanding different methods, and AI/automation can be different parts and pockets of your underwriting process. Start with that. Please do not try to be, they say perfection is the enemy of good. You try to
mm,
have a perfect system one day, you'll never reach there. Have parts of goodness, the system naturally becomes good and perfect.
yeah, agreed. Um, I also wanted to move on to data. I think we'll touch upon that as well. As in, we're talking about open banking,
Mm.
data coming in, and there's so many other rich data sets that are available out there. Uh, is there something called too much data in your view, as in, or uh, there's nothing like too much data, as in it is, you will take in as much data as you can? But you also mentioned a good point. You said data is as dumb as the person looking at it, right? So uh, so how do you view all these data sets that are becoming available? I think in Indonesia especially, where there is no bureau as such, which is so, like, it's not that comprehensive. So you would look
Mm.
at a lot of data sets for different pieces there. So what's your view on that?
I think Indonesia or any country, right? There is always a chicken and egg problem of, is the data available and you want to build on top of that for underwriting, or you want to innovate something as a category, which then widely becomes as an acceptable data source, right? Uh, so I think for me, what is really important is, I generally have a simple view for this. I always tend to categorize, because then otherwise you'll get a lot of overwhelmed with sources of data. So
Yeah.
I always categorize data as traditional data and alternative data. Pretty simple. Traditional data is what all of us are pretty used to. There is a wider sense of acceptance, because it doesn't matter what I think, it ends up what my risk approves, right? So traditional data is, let's say, bank statements or other forms of validation data, where somehow you're able to figure out your obligation, income estimation. It might be very different for freelancers, it might be very different for influencers, it might be very different for somebody who is running a shop. Depends, right? So we are able to identify income for each of the segment. However, alternative data is the modern sense of data, and I think why we need to look at it. Like I think that was your first question, right? What happened to digitization with
Yeah.
pandemic? Typically in Indonesia, we have 65 million SMEs. That's the headline number. Pre-pandemic, we had 7.5 million SMEs which were digital. Post-pandemic, we have 17.5 million SMEs which were digital, right? That has just 2x. Now, is this going to stop? No. With the amount of VC tool, the new startups which has come up in managing bookkeeping tools, in managing payment transfers, we have Curious, we have so many ways of how transactions are happening today. So the data is rich, but you have to have a view to look at it, to use it for underwriting. So I can define that as alternative data / transaction data. They can be somebody's utility bills. They can be somebody's revenue statement. This actually came through a very personal experience, right? During pandemic, a lot of people did not order outside food, right? But everybody put pictures of their birthday celebration on social media. I'm sorry, I think very differently when it comes to product, that's why. But I used to always wonder, did everyone become a phenomenal baker, or cakes were identified through smaller pockets of center of trusts? The trust was pocketed, right? Your family used to end to order a theme cake from someone they knew, home baker turned business person selling on Instagram. So much businesses popped out on Instagram selling, people sold candles, people sold so much good stuff, home shipped, homemade, sense of care, sense of trust. Now, who are funding these businesses? Right? A lady who just started a baking business at home now needs an oven or a big industrial oven to buy, right? Nobody's gonna underwrite her. Like, are you telling me a new entrant to the business and nobody wants to trust that lady? No, I think we should trust that lady, right? She's doing a good business. She's selling on Instagram. She's selling cakes, as simple as cakes. I took a very simple example because that happened with my own birthday, right? And that's how I'm like, who did this? To the point now everybody has become a baker. So my point is, we need to always look at data in this manner, not data in manner of statement. Somebody has to verify, somebody has to validate. Then once you determine data points such as these, social commerce data, e-commerce data, then the second question becomes of, are these data available in form of API, which are trusted and validated by someone, which you don't need to spend effort on? And a lot
But
of
that's
open
always a
APIs
challenge, isn't it? That your ideas are sometimes are not backed by the data actually being available easily, right? As
Yes,
in
but
that's
I feel
always
now is not the point. Now every data is available easily. Validated data is available easily. I think we just need to be open about it. It's not like I'm asking the customer for his own revenue statement. I can easily get it from social commerce, Instagram, Facebook, and other places, which easily tells me what is a transaction. Then I just need a system which can work on top of that data and underwrite a loan. Definitely observed humanly, figure out certain parameters within the criteria of risk acceptance, etc. But all I mean is, it is not that this data is not available anymore, even in emerging economy, right? It's about figuring out. Definitely, we respect the license and the rule of the law, rule of the land. That is again another angle which you need to respect in Southeast Asia. Even if the data is available and it's validated, how can you use it, etc. So I think a lot of these parameters are coming up where we can figure out, run experiments. You don't need to choose 100 data sources. Choose 2 or 3 which work well with your business. Your risk is cool. The rule of the land allows it, but be open to it is all I mean, right? A lot of working capital, supply chain financing products can be built on top of this. So I think for me, access to data is in this direction.
Oh, fantastic. I know we're getting up on time, so I'll just have my final question, and then we'll also take any questions which can come in so that we can quickly round up the chat. I think my final kind of point that I would want to discuss is, see, we are going in I believe, an irreversible direction towards digital financial products, digital lending being part of it. It's irreversible. We might have all this ups and downs in terms of uh, VC funding being dried up, or having fiascos like SVB or something like that, right? Isn't all said and done, but the trend is that we are going towards that's not going to reverse out. We're definitely going on that irreversible path towards digitization. So as we are going towards that, and everyone's building out a digital proposition, I know the banks are moving in that direction, fintechs are innovating. So as we go towards into that space, and everyone has a digital product, what is the differentiation, Aditya? As in, where do things get differentiated, right? I know we're talking about building world-class digital lending products and experiences. What becomes a USP or a differentiation when everyone has a digital lending product?
I think it's inevitable. I agree with you. Everyone is going to have a digital product. But I think the level of differentiation would be naturally coming out of the digital journey itself. And the customer would feel it, because just applying a loan digitally does not make sense. Am I looking at the intrinsic data? Am I looking at the device data? Am I looking at what sort of data? How am I able to underwrite the consumer, and I am able to get back to them with a decision, is going to be the underlying theme of differentiation, right? Even right now, I can say everybody is some form of digital or not. Even if I use a Google form for a loan application and assessment, I might still say I'm a semi-automated or semi-digital journey. But the point in my view is about scaling up the lending product in an automated manner, in a scalable manner, which is not so very much manual. We have to challenge that. We have to challenge that mindset that, hey, you cannot automate this, right? Imagine years back, how did credit scores start? People would just wanted to ask, hey, have you given loan to this person? Is he good? Is his repayment good? Can I also give a loan to him? This gave to rise to bureaus. The whole idea of bureaus came through social lending, right? Now, so I think if they challenge themselves to build a bureau, a centralized repository of consumer trust, why would we not challenge in this generation, in the 21st century, where I say that, yeah, I need to use automated decisioning to some extent and differentiate my experience of the lender, my experience of the borrower, sorry, in terms of how quickly they're getting money, how seamlessly, how much details they need to give, how much is automated. I think it's the overall experience. That lending experience is going to be the key differentiating factor, which is also going to help you in the retention part, I feel. Yeah.
I love that streak of innovation that you have, always kind of looking to disrupt and always looking
Yeah.
to challenge. Wishing you the very best on that,
Great.
Aditya.
Thanks.
Thanks for your time today.
Yep.
It's been a fantastic chat. I hope everyone here who's dialed in has enjoyed the conversation as well. I have thoroughly enjoyed it. I think we touched upon some fantastic points. I've taken a lot of notes and I'm taking away a lot with me from this discussion. So thanks everyone for dialing in. And I think for those who have missed dialing in, we're going to send a recording out of this out to them as well. Thanks,
Yeah.
Aditya, again.
Thank you.
And
Thank you,
for
everyone.
everyone
And
else, have a good rest of the day.
Yeah, rest of the day. And I think one good thing which I liked about this is, I think it really felt good. We are speaking to the community of people who are into lending. And I think this is just going to help uplift the whole community. And I'm personally always available on LinkedIn to connect with anyone who would love to chat more about this, because I think I would love to learn more from people and their experiences too. And thanks, Bharat and Praveer, for this platform. Yeah, loved it.
Yeah, same here. Love to keep this conversation going on, and we'll find venues either online or digital. We'll continue to do this. All right.
Yep.
Cheers, everyone. Bye.
Okay. Bye. Bye.